Hi there, a very good morning and good afternoon to all of you, depending on wherever you're watching me. This is Simply Stocks, and I'm live in this live session with you all again. And today I want to talk to you about a different topic, and this is all related to the Fed rate hikes and the rate hikes that is happening or that will be happening here in India. How long will that continue, and whether we are going to see an end to it in next year or when it could be. So let's understand that as a whole as to what my understanding with respect to the rate hikes currently that are taking place. uh, Plus I'll answer your queries as well, and we'll talk about which then, if the rate hikes are going to end or if it is going to continue, then what could be a very decent portfolio to be with for the next 2 to 3 years. So we'll get things going. I hope more people join in today as it's a Sunday afternoon. So hopefully more people join in. So we'll wait for 4 5 minutes. We'll discuss as usual about my favorite topic, and that is sports, and then we'll get back to stock market again. So Shiv Kumar, a very good afternoon to you. Hope you're doing well. And I hope all of you are doing well in terms of your health. Do go for your regular checkups with doctors and everything, with whatever that is taking place with respect to health concerns. In youngsters in middle age group, kindly do take care of yourself and enjoy your time. Investments money will keep coming in, keep going, but you need to enjoy your time and be in the best of your spirits and health for sure. So SP, good morning or good afternoon to you. Sushant, a very good afternoon to you as well. And We'll discuss about stocks later on, so but kindly ask queries once I complete the discussion, and I'll have the session open for more people to probably ask queries and answer, and probably I'll answer all of you in that. So Conquer, yes, hand is much better. It's now the plaster is off, but there is a little bit of pain. There is strain in here, so probably it will take a week, 10 days for this to get away. But yes, it's getting better. Thanks for asking. Uh, Ajay, a very good afternoon to you. Sushant, uh, we'll discuss about stocks in a while or so. So before I get going with the market talk and where the market it seems like headed and what it is doing at the moment, and probably the specific talk on the rate hikes topic, and where and how it will impact specific sectors, let's just discuss about, or let's have a recap about some of the sporting events that took place just lately. So basically, what has taken place, and now you'll hear some disturbance as there are some, you can say, sellers going out on street. So you'll hear some disturbance. So sorry for that. For a while, you'll hear that. But we have seen, and it was disappointing that India lost in the Women's Asia Cup to Pakistan, and that was really something that I did not foresee happening. But Ramesh Pawar, the coach of the Indian women's team, did come out and defend in terms of the fact that they were trying out different things, and we had the captain Hamanpreet coming in at number 7. Which was pretty weird, and probably if Smriti Mandhana would have played a little longer, Shefali would have played that match. I think we would have easily won that match, but Shefali was rested, and Hamanpreet virtually did not bat. She batted 5 down. So in chasing, not a very big target. We missed out by around 10, 11 runs, even after a late effort from, you can say, lower order. Things went out of hand probably in the first half, first 8 10 overs. So they did rectify that by beating Bangladesh, which is a much stronger side than Pakistan. So we are back on track. We are still on top of the table, and hopefully by the time this tournament ends on the 15th, we should end up winning the event. So that's in the women's cricket. That what is happening. We have the women's T20 World Cup in February in South Africa. So looking forward to that as well. Plus, in you can say men's cricket. Uh, Frankly speaking, I don't know why this one day series is taking place. We are having all our players, main players, on tour. Probably that one day, this one day series could have been scheduled at a better time so that at least two, three of the main batsmen or at least one or two of the main bowlers would have played the series, because it is not very it doesn't go well even with the touring side. So it is not fair on part of South Africa. Let me know what do you think about it, that if they are playing a second string India side, a team that is probably remained the best in the world for many years and not quite at that level at this point of time, but they are coming back. And I believe in the T20 World Cup, South Africa will be the team to look out for. So I am of the opinion that most of the international matches, at least half of the main side should play. So be kind. Why Sanju is not considered is because you cannot have wicket keeping 11 playing the World Cup. So basically, Dinesh Karthik and uh, you have Rishabh Pant in there, so probably Sanju would not make it. In terms of Sanju versus Pant, I think Pant takes the cake. I think Rishabh Pant, if he's played more in this format, I think he can do better. And if he's played at the top of the order, he can do better. But that is another debate for another day. But I believe that we have a set batting lineup that should not be tinkered with. So that is pretty fine. The problem lies in the bowling, and that is why I feel that India might not end up winning the World Cup, although I sincerely hope they do and their batting stick out. And so what comes out to what my understanding says is that Virat Kohli is now becomes even more important in this lineup, so that he can, if he plays all say 20 overs, say 15 overs, 16, whatever overs he gets, he plays to the end. I think I think we have a good chance of making 200 every time, and that is what we require with this kind of a bowling in order to win. Or if we are chasing 200, we should chase that down. And for that, one of the top three should bat 15, 16 overs, and that's what Pakistan is doing and consistently doing. I don't know how long that will continue, but that is how it is, and they are doing well on that front because their bowling is extremely strong, as has been for the last 30 years. And their top order, the top two are doing all the things. So probably if that continues, Pakistan is a team to look out for. But I still believe South Africa and even a West Indies, if they qualify, they could be extremely dangerous in this format. So uh, most of the people do not like me talking about sports. So let's get back to the markets again. Basically 17,200, 250 is again upon us, but mid cap index is holding strong. And I believe in the next couple of years, uh, we could see a good mid cap rally. We have had 1 year. So if you remember, October 2021 was when probably the whole market made a high. And so I believe that it has been 1 year. By Diwali, it will be 1 year since that highs were made in many of the stocks. Many have gone down tremendously, but some have gone up as well. So now things in a situation where I believe that the major money will be made over the next 15, 16 months. I think there could be a huge rally upon us. Whatever we have seen currently in the mid cap domain is just a precursor to what is going to happen across the board, whether it's Nifty or the mid cap or the bank index or other indexes. So I feel that 17,000 should hold. I still feel that even though there is selling from FIIs time and again, and there is heavy buying as well. So be with the top quality companies, be it in small cap, mid cap, or large cap, and you will end up making money. I think problems will occur when you make say 20%, 25% and start to move around into different stocks, and then there could be problem, because if you get stuck with one company that is perhaps not performing as the sector is performing, then you are in deep trouble, because uh, other stocks will continue to perform and do well, and then you'll be forced to sell that stock and move into other companies. So be with your winners for a period of at least 15-18 months, and you'll see how these things should work out, inshallah, for all of us, for all, since see, we all are either retail investors or positional traders. So this channel dedicate is dedicated to that, and hopefully everybody uh, uh, would have understood that, since I made this channel over the last 4 years, it has been dedicated towards investment. So in terms of a positional trade, consumers, Indian centric companies should do well for the next 4 or 5 months. In terms of a 1.5 year trade, now I'll come to that point as to what needs to be picked there. So, in order to understand what can really perform over the next 2 years, let's just understand how the rate cycle is panning out. uh, at the moment, what is happening is that Fed is currently looking at a 8-10%, 8 to 10% inflation rate, which is extremely high for the food inflation there in US, considering how the inflation has been for the last 10-15 years. But remember that it was all the Fed's making that what inflation is upon us at the moment. So they have to rectify it. They are always behind the curve. They are behind the curve again. Uh, it will take time. I believe that the rate hikes could continue till around June of 2023. And by that time, the winter in Europe would be over. Bank of England will also continue to hike rates in order to curtail inflation there as well. There's a lot of power in inflation in power and other industrial sectors. So once the summer is upon England, because there is a lot of power cost, fuel cost in winters there in Europe. So you need to understand that. So I think about March, April, around April, May, will get things going there, and hopefully, I think from April, May onwards, export-oriented companies will start performing. Probably will. Big, Probably before that it will start performing. So I think from January, February onwards, we'll see the up move happening, and in earnest, the performance will be big from April, May onwards. Now the question is what will happen here in India with in terms of rate hikes. Indian central banks have been pretty good. I mean, uh, currently, I feel that the way the rate hikes was started here in India earlier compared to global banks, we are in a better situation. We will get to around 6.5%. Currently, I think we are around 5.96% or so. I think we'll get to 6.5%, and there 6.5, 6.7. You can take your pick. Around there, I think the rate hike cycle will end, and that will give another, you can say, leg up for all the Indian centric companies, even debt companies, companies with little bit of debt, because people will understand that now the rate hike cycle will only reverse rather than going up from here around 6.5 or 6.7%. So, having considered all these points, what needs to be done as an investor? So, first thing is that if you have invested into Indian centric companies, consumer companies, which are mid cap or large caps, I think you are in the best situation. So, the best case scenario here is that if you are invested into any consumer centric companies here, and these are not recommendations, these are just examples, that this doesn't apply to FMCG. I'm not saying an HULs or an Asian Paints or a Pidilites or a Britannia or Nestle or these kind of companies. I'm saying any consumer centric company, if you are invested in, which works in India majorly, 70-80%, at least 70-80% of their business here is here in India. I think you are good. And if you are invested in say 2-3 months back, from July onwards, August onwards, then you are even better. Say a DMart, say a Century Plyboard, say a Varun Beverages. And a disclaimer, I might be having these stocks in my portfolio. You can pick your the tile stocks, the paint stocks, auto stocks, even Maruti's of the world, Hero Motocorps, auto ancillary companies like I've always talked about Endurance Tech, Jamna Auto, and so on and so forth, and many other companies. So any company that works here in India will perform even better, even though uh, the rate hike cycle might end in Europe. Uh, One thing that could happen is that we could see a big run up in this Indian centric companies by February, March, and we could have a decent correction of 15-20% in each stock, even 30% from those highs for a period of 2-3 months when the IT and pharma sector or the export oriented companies will start performing. So what will happen is money from here, some money, 30-40% of the money will flow into that IT stocks, because IT has fallen a lot, so there could be a recovery there. And that is where one needs to have an understanding as to where you are, how much money have you made, whether you are in decent profits and you're okay with that, or you want to hold further for another leg up that may happen from July onwards, 23 till 24 elections. Because I'm pretty confident about it that another run up for these Indian centric stocks will happen in the second half of 23 till the middle of 24, till elections or just before elections. So this period between February, March to July, you could see some amount of volatility and declines into these stocks, which are all consumer facing stocks or festive stocks, etc. But the next festive season will be even bigger. I'm pretty confident on that. So, in that sense, what I am doing is that I might just hold on to these stocks for this period of 18-20 months, rather than chopping and changing and running around and then finding IT stocks, and then IT stocks go up and something happens in UK or Europe or US, and then dollar comes down. So if dollar comes down, then the stock gets sold off and all that. So it's better to just stay with companies in which you are better, you have a better understanding of how the numbers are going to pan out, which are more consumer centric companies. Simple that you have a particular sales, you look at a DMart balance sheet or a DMart profit and loss account. It's a simple thing that they keep on churning 30% sales growth. I don't know how they do it, but they do it. And the bottom line also grows by 35-40%. And there are not a lot of, you can say, uh, extraordinaries in there that you might not understand. So I think it's better to be with that. Second scenario is that you are invested into IT companies and consumer companies and you are down in those IT stocks. I think you'll recover your money by end of December next year. I think in the next 12 months you will get some profits out of it. And so that is another scenario. So I don't think this is the time to sell IT stocks. I think these are the times to, if you really have a 3 year time horizon, yes, buy into IT stocks, and especially larger IT or larger mid cap IT companies like L&T Infotech, LTTS, etc., TCS, large companies. You can accumulate here and wait 2 years, you'll get your money. The third scenario is that you are invested into most of the export oriented companies and you're down 20%, 25%, and what needs to be done. Now there are two aspects to it. If you can find out companies, and there are companies which can go up 2x 3x over the next 3-4 years, if you can find them out, which are more consumer centric companies that are undervalued at the moment, probably you can shift. Otherwise stay with those IT companies if they are good quality. Say you have bought something like a uh, Tata Elxsi at 9,500, it's at 8,300, or 10,000 and it's at 8,300. There's no need to worry. You have to hold 3 years. You will get your money back. You have bought a TCS at 3,600, it's at 2,900. No need to worry for that as well. So I think it didn't go to 3,600 if I'm not wrong on it, but you have bought it at highs. It's at 2,900. What needs to be done? You have to buy more. So uh, top quality IT companies, Larsen and Toubro, Infotech, LTTS, Mindtree, Coforge, etc. All these companies, it's a no-brainer. Many of you know about it. They will perform if you are invested into chemicals, IT, pharma, good quality. Say a pharma company, say a Lotus Lab at 650, you bought at 630, 620, 660, 620, all those levels, and you're worried. The only thing is that if you don't have that time frame of 2 to 3 years, then you are in trouble. because next 6 months could be bad, and that could take Lotus Lab could be down to 500, maybe 450, we don't know. But over 3 years, I think it's a doubler from here easily. The way the numbers and the way the company does. So that's my call, again, a disclaimer. So take your own call. But that's how I believe. So if you are into export oriented companies, you have to wait 2 to 3 years to make money, to make good money. If you are into consumer companies, you are in the best shape, in my opinion. Even if Europe, US do well for 3 4 months, even if your companies do not do well in the first half of next year, you will do a lot better from July 23 till 24 end, or 24 September, October. So I'm looking at a time frame of 2 years from now, and what needs to be done in that respect. What I have mentioned is what I have mentioned. So that's the call on these stocks. That's the call on the rate hike picture. I don't think it can continue beyond June at this point of time, unless something happens in the war, unless something really crops up in terms of economy globally. I don't think in the current situation, I don't think the rate hikes could continue globally beyond June of next year. All right, so I'm ready to answer your queries. Kindly use the super chat and super sticker feature, and that will help me grow the channel. That will help you also ask me questions and eke out answers in greater detail. Okay. So Sriram, I don't see Nifty going to 15,000. US and Europe's recession, at least Europe's recession, is already priced in. And that is why I'm saying that all those IT and all those kind of companies are going down. See, you need to understand that what FIIs are selling, what happens in a stock market. So if something like a Titan or a DMart keep churning out 30% profit growth, there is no way that that company can go down, or that stock can go down 15 20% every year. So that is what you need to understand. Don't, and I urge that to all the investors or all who are watching this video, is that don't overcomplicate or don't complicate your investment thesis. The simple investment thesis is that a company growing at 25 30% on the profit front will grow at 25 30% CAGR. So the stock will grow at 25 30% CAGR if its PE is relatively according to the industry PE. So suppose a company is growing at 25% and its PE is around 30 35. It's a consumer led company. It should continue to grow. The stock should continue to grow. The PE is not very expensive. The stock is not very expensive. So just understand valuations of the specific stock you're investing in and in which condition it is working, and you will end up making money. Forget about the market per se as to where it can go. I have seen markets go down 20 30% and people make 3x 4x returns. So that's where you need to concentrate in that respect. So Surendra, KPI Green has broken out again. A disclaimer: I have the stock in my portfolio. I think now it is headed towards new highs. A better entry level would be around 900 if you get a chance. 880 to 900 would have been much better. I think not at this price. I don't think you buy at this price. Probably look for a breakout into new highs to buy. Both science and emphasis is good. Priya, the only you can say problem with these stocks are that they are US centric stocks. So they will take time to perform. If you have not invested, don't buy. If you are invested, hold 2 years, you will make money in these stocks. Okay. So Electronic Smart IPO is coming in. I have not analyzed in detail, but it's a decent stock. I won't say that you buy into the IPO. Wait for listing, wait for some correction, and buy long term. So I'm not here recommending, never I have recommended about a stock buying for IPO and then making money, nor that I have ever bought one. I've never bought a stock in an IPO. I have bought one stock, that is Nykaa. On the day of the IPO, made money in it, sold it. That's just about it. Otherwise, I have bought DMart on the day it got listed, made money, sold it later on in few months or a year or something of that sort. But I won't suggest that you buy into any IPO. The reason is that you won't be able to invest a lot. And then eventually, if the stock goes up, it goes up 20%, 30%. On that front, you won't be able to make a lot. And if it goes down, then you're stuck. So better to wait for the listing. wait for 1 quarter and then get into the stock. So Priya, Rolex Rings is a decent stock. I've looked at it. It will perform if the auto industry perform. Now there is a huge debate over the auto industry thing, that whether in the next couple of years the auto pack will perform or not, because many have their businesses in Europe. So be careful in there. The valuations are fine to invest. The only point here is that whether it will perform or not. So that's the call. For Page Industries, well, if you have 5 year view, buy now. If you have 1 year view, buy at 46,000. That's the only call I can give. But don't invest 1 year or 6 months in that company. Again, a company that could perform extremely well in the next 2 years, even from these levels, considering the kind of up move we'll see in the consumption pattern over the next 2 years in India. I do not track Kalyan Jewelers. I won't be able to comment on it, so no talk on that. Microtech Developers is a decent real estate company, but I'm not very bullish on the real estate stock, so I won't say that you go ahead and buy or do anything with that. Chola Investment, I don't have any view, Joseph. I don't track most of the financial stocks, so won't be able to comment. Uh, so that's the call there. I don't track Solar Industries, won't be able to comment on that either. So that's the point. All specialty chemicals gave bumper returns till now. All are high CAGR stocks. Your views? Uh, Government banned chemical companies to control pollution after a few years. Yes, absolutely. So this is one of the biggest reasons why I don't invest into the chemical stocks. They are very good for trades. Many companies, especially I like Sumitomo Chemicals on declines. I like something like Aarti Industries, which has come down appreciably. If you have a long term view, it looks good. Naveen Fluorine, you have some other companies in that same domain. So the Galaxy Surfactants, etc. But see, it's a very difficult thing to do in chemicals, because if your raw material prices go up sharply, the stock may go down. If your product prices come down sharply, your stock will go down. And that is where, see, I buy into companies which are more or less away from all these nitty gritties. That okay, a company just makes a product, sell it, and make money. If their consumption goes up, it will make more money, and we can easily find that out with the way people move around in malls, or how the picture is in shops, etc., and how the products are selling. So I look at, I sincerely normally I'm not able to do that, but most of the times I try to probably find those kind of stocks in which we are able to understand how the sales pattern would be. In chemicals, it is extremely difficult to find that out. So it's a very good, they are very good plays on trades, but not on long term investments. So that's the call. Wockhardt Pharma, if you have it, exit. Not a very good stock at all. There are issues with management and many other things. So if you are not in heavy losses, exit. Get into something else. Divi's Lab. See, in pharma also, I've talked about many times. Divi's Lab is a top pick at these levels. Look very good. So Joseph, Vedant Fashion is in my portfolio. I believe Vedant Fashion could be headed much higher from these levels. I think Vedant Fashions could be headed towards 2400, 2500 over the next 2 years or so. There is a lot of you can say sales that are going to take place in this wedding season and the next wedding season. So I'm very hopeful on Vedant. So Ren, thanks for your contribution. So KPI Green, basically, I think you're asking, you're not asking KPI TC. See, KPI Green, the reason I have in my portfolio as well. See, it's an interesting company. It's a risk that I'm taking, but the thing is that the way the sales have gone up and the way the margins are at 50%, it looks extremely good even at these levels. So the management, I'm going by the management call, I'm going by what their sales figures have been in June. And if that trend continues, I see KPI coming out with 50 rupees of EPS in FY23. uh, Heavy sales going on, there are a lot of orders they are getting. Companies are shifting towards green energy, solar energy, and they are a direct provider to it. uh, 50 rupees of EPS at around 900 rupees look very attractive, and it could be treated as a pure consumption play with respect to the solar industry. And there are very few companies making so much of profit or margins in this renewable energy space. So I think there could be a re-rating that could take place in KPI Green, and that's why I picked that up, and that's why I like even at these levels the company. But there is a huge risk to it. It's a small company. The management could be lying altogether. The numbers might not be the same, and if the numbers are not quite what I envisage, then the stock is extremely expensive. So there are two sides to the theory in here. Okay. Aztec Life Sciences, Ganesh, a decent stock to get into, but again, the issue is, remember that once pharma start performing, large cap pharma will perform, then the mid cap, and then the small cap. So Aztec could perform, but will take time. Okay. PI Industries is a decent stock, Priya, to invest from a 2 3 year point of view rather than trade into it. So that's the only call I have. Is there a problem with housing finance companies? People bought flats as an investment because interest rates were down. See, Concur, the simple point here again, it's a complicated business. That's why I don't delve into it. But basically, to tell you frankly, uh, all these financing companies, the best of them is HDFC and probably Bajaj Finance, which is not into housing, which is into consumer financing. Why I don't like housing at all is that the prices are exorbitantly high, and you need to understand that people who have invested into assets like stocks or real estate, say 10 years back, 15 years back, or Bitcoin, or into gold, or into other asset classes, say dollars or currencies, etc., they have made money, and probably they are going to make money over the next 5 10 years. People who have bought flats now and looking at rental income, etc., they'll not make money. Second thing is that people have gone into buying into say houses. They basically either bought for themselves, or they have bought as an investment after putting in a lot of money and putting in, say, as you mentioned, analyzing interest rate cost, etc. And now with interest rates going up, this is going to be troublesome. So even with lower interest rates, the housing sector did not do well. I tried my hand at some of the real estate companies. They also did not do that well in terms of numbers. Real estate companies have a lot of issues uh, after the government cleaned up the sector, which was a very good effort. And so I would stay away from anything related to direct real estate. I would buy into a AC company, I would buy into a refrigerator company, I would buy into a Dixon per se. I would definitely buy into an Asian Paints. I would definitely buy into a Century Plyboard, or anything that is related to housing, Polycab, Havels, Astral. But I'll not buy into a housing company or a finance company, and these are the reasons. See, Ganesh, Deepak Nitrite is good, but again, you need to understand Deepak Nitrite did well because of sanitizers that were produced at that point of time, and it blasted off. But over a period of time, I think numbers should be normalized, and then the PE could decline. So that is what is happening at the moment. Now, how long that could continue, we don't know, and that is where you need to understand that probably it's better to buy into consumer centric company for 5 years rather than Deepak Nitrite. uh, that will give that may give you sleepless nights. Okay, what else? See, Tide Water, don't average, wait for a move and then exit. Do not sell now. You'll get a move, and then probably you can average. Bajaj Finance, see, rather than looking at stock price as to when to buy in stocks like Bajaj Finance or a Titan or a Asian Paints or a Pidilite, etc., look for market sentiment and then buy. Whenever market sentiment is extremely bearish, there is a lot of blood on the street and many other things happening, just buy these kind of companies and just stick to them and do not sell. These companies are not for selling. These companies are just for buying and holding for at least 4 or 5 years and then probably sell. I won't say that you don't sell ever, but probably 4 or 5 years like that. So that's the call on both Bajaj Finance and Finserv. I think Astral is doing much better. There is issue with numbers with Supreme Industries. I think Astral, the way the numbers are panning out, the way Astral has come back as a stock, you need to understand that you have to also look at how the stock prices have worked out. Yes, the valuations are stretched, but there could be some reason for the valuations to remain stretched for so long. So you look at a DMart, I'm not comparing both of them, but you look at a DMart, you look at a Vedant Fashion, you look at a Asian Paints, Pidilite, etc., they just remain at high PE. So Astral in this sector may just remain at high PE and may just continue to perform because their numbers will continue to become better as the pandemic is now beyond us, and it's a thing of the past hopefully, and so things should pick up from this festive season. All right, guys. Thank you. Thanks a lot for being online. We'll be online again on Thursday afternoon, hopefully. And do take care. Kindly do subscribe to my channel and hit the bell icon so you get my video straight away when I post it. And do subscribe to my Patreon network as well. On Patreon, you get a lot of updates. You get updates on portfolio. You get updates on different stocks. Plus, you get weekly calls on a couple of stocks, etc. So you can check that out as well. Thank you.